Hello, this is understanding Elon Musk, and I want to talk about a little bit. I have here some notes, so I can easily talk about it because this is will be an interesting talk about interest rate and a little bit about the economy and all those things that are going on. Uh, so let's presume it is now the interest rate is now at around 5.5%, if I'm correct. Yeah, 5.5%. Europe is 7.4 point. What is it? 4.25. So they are close, 1% different or something. Okay. So my association is what it goes to 7% or much higher than we are used to. So what will be the effect? And uh, I ask ChatGPT, and I also look a lot of to Bloomberg specialist, and I think ChatGPT in this case Bing is agreeing with me. And of course, everything is about how you prompt it. So there is, it says here, there is an inverse relationship between the stock market and instant rate. The higher the instant rate, the lower the stock market. Why? Exactly what I said. You can make more money. The money, you can only spend money in one place. The money can be extracted. There is an amount of money all over the world, and that money moves from gold to silver to stock to bonds to investments to houses everywhere. And you can imagine if there is a place where people can think, oh, we can make a lot of money, for example, with gold, you see that all the markets will the money will extract from there and will be put into gold if people think gold will be it or something. But the same will happen with stocks. Everybody will go into stocks, or if you have specific stocks, for example, growth stocks, you will see that other stocks are uh, 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 are are getting the money from there will be extracted and will be put into these growth stocks. There is always this movement between the safe stocks, dividend stocks, and growth stocks. You see always if the economy is bad, you always and interest rate is low. You always know that if you dividend stocks, you always get your 4 or 5 or 6%. So people go in dividend stock. If there is the market is very volatile and the Magnificent Seven, that is what is it? Apple, Tesla, Facebook, Amazon, Microsoft. If those companies are doing good, you see people moving their money out of the dividend stocks and into those stocks and catch up the growth, the doubling sometimes of those stocks, and get a profit there. But if they want to have security for a long time, you see that some people stay their whole life into dividend stocks or just in the index of of a market, the Dow Jones of S&P 500. Of some people they have a specific market they are interested in, and they go to an ETF. So these are the instruments, and those instruments play on depending on the mood of the market, and it has a lot of factors. And so this factor that the interest rate that is controlled by the Fed, that has an influence on also the behavior of what people are doing with their money. Do they put it into gold or do they put it into stocks, etc., etc. We have to tell about we have crypto. So what you saw in the old days that if it goes bad and there's a deflation of money, if they printed more, you always saw in the old days that the gold price went up because that was the safe haven. And these days we don't see the movement so clearly, but we see this movement a little bit in the cryptocurrency because there the movements are more extreme. And I think the people that in the old days invested in gold are now investing in cryptocurrencies. And I think still people, why do you invest in cryptocurrencies? Invest in those safe havens as gold and silver. And those are much safer than those cryptos because you see the scams, you see all kinds of, but there are also scams with gold, but I must admit. So, but still, even then, if you are really a billionaire or millionaire with cryptocurrencies, keep gold always in your back pocket. You see over the years, of even now, gold will be always not moving. Okay, you can say, yeah, that is wasted money because if I invested it in Bitcoin, I could make more money. But you see sometimes also the Bitcoins goes very low. If you say, okay, maybe you have to invest it in dividend stock, Yes, but if you want to have a secure portfolio, you need to have gold in it. You need maybe some cryptocurrency in it. You need some dividend stock in it. You need maybe some ETF, some index funds, and some growth stocks in it. And all, if you have like a package like that, you will balance out all the strange movements in the market. And of course, you need to go all over industry, so you don't need only like the tech stocks. You need like gas and oil, like the energy sector. You need the food sector, you need the health sector, so you also have to split the stocks if you buy stocks in all those sectors. Because sometimes the sector goes good, sometimes the sector goes bad, but if one goes bad, the other one goes up. And what is the whole thing about it? What I already said, if there is an amount of money that grows slowly and slowly, slowly, and you want to have this growth over the years and years and years, you want to have that growth is also your money will grow. You have to invest in all the things, because what happens, it moves from one sector to another sector to another. It goes from bonds to gold, from gold to stock, from stock to this. So, but if you have all those things already spread, and the whole market go up because there's more money in the market because the Fed is printing that and is giving it to people, and those people invested in all those things. So there will be more and more money, and everything will grow. So if you want to capture that all, you need to go in all those markets, and then your value of your portfolio will go up. If you, for example, think, oh, I will only focus on gold or only on this, yeah, if people, the extra money will not go to gold, but will maybe go a piece of to cryptocurrency and to stocks, you miss this game. So that's why you have to diversify your portfolio. So you can catch, if there is more money in the market, you catch that extra money in some of your portfolio will go up because people will invest in those markets. And then you catch that extra money that's in there. So that is the whole theory about portfolio diversified. The people that are really smart, they trade on these movements. People go into gold, and then gold is not. They see that there's more money to make on the stock market. They go jump in the stock market. Then it peaked out, and they say, "Wait a minute! Now the bonds are cheap, so we go into the bonds, or we go in dividend stock, and we wait until we know that we cannot make like more than 3 or 4% profit. But if we do it all in dividend stocks for a while, we always have 5%, so we've double more." Profit, so we wait a little bit until, for example, the stocks are down and it is the bottomed out and goes up. Then we go out of our dividend stock and we move into the growth stocks again. So there are people that play that game, and that's also what you see the good traders. They move from it can be like they buy corn or they buy wheat, and then after a while they buy some others. For example, they go to Tesla stock, and if that is the market is totally not understandable, they go in Coca-Cola because of the 5% dividend. And if that is also not trusted, they go to government bonds. So there are some things you also need to know. So if you have for government bonds that are 3 or 4%, and the interest rate goes up, and it is not 3 or 4%, but it goes higher to 4 to 5%. Those values of those bonds you had with this 3% will be worth less. But if there are the new bonds with higher interest and more return, they will be still okay. So you have to not forget to sell those bonds with a 1 or 2% loss, and then rebuy those 7% newer bonds. This is one of the mistakes some banks in America and some banks in all over the world made. They keep on those bonds with 1% or 0.5%, and now it is 5 or 6%. So they are making really losses on those bonds. The value of the portfolio went down an enormous amount what they expected, because they missed that. So that is a mistake. You also have to think about. That's the risk of bonds. If bonds goes down, or the interest rate goes down, you have to go out of this. You have to sell those things and go into and wait. Maybe stay in cash or stay in something that you know will stay the same or go a little bit inversed up. Normally, if the interest rate goes down, the stock market goes up. So you find your stock that can go up, and you invest in that. And if you're still not sure which stock it is, you can go maybe back to the dividend stock for a while until you find the stock that is okay. This one will rally up the next 2 years. Then you enter that, and you follow up that ladder up, and then if it is stopped out at a specific moment, you sell out that stock, and you look around again for what can I do now. And if you don't know anything, you maybe will park your money into gold, and you are sure that it is now stable for the amount of money will stay the same. Or you do cryptocurrency a little bit because you think, okay, that can still grow a lot, but there's also a risk that it can implode. Yeah. So there was all this. There's a lot of to do if you want to play with money investment. There are a lot of things you need to know. You need to know instrument bonds, the bonds that are government issued, but also companies do make bonds. You can do IPOs, you can do stocks, growing stocks, dividend stock. You can go to ETFs, you can go to indexes. You can go to retail, not retail, but invest in property or in ground. So there are a lot of things: gold, silver, wheat, all those things, and you don't learn it at all at school. This is what you have to study after school: how to invest, how to build up your pension. After a while, when you work, you need to contribute to your pension fund. Now, I would say if that is the time, it is a perfect time to say, okay, now I take some courses, or I will look at some video, I will understand how this works with those investments. Because if you start when you are young, like 24 or something, and you start investment, you buy your dividend stock every month with the money you don't need. If you do that for 30 years, after 30 years, you will be 5% of a lot of money. You will be okay. You build your own. In your private time, you build your own stock or your own savings by yourself. And then later you still have your own savings, but you will understand better the whole financial market. So if we will see some movement to the 7% or 5, it is now 5%, so 6, 7, 6.5%. I expect that people will be very careful with in the stock market, which kind of stock they will buy. They will only buy the stock that they will for sure know that can gain a lot. Now, we talked a little bit before about stock, about superconductivity. So I expect those companies that has to do something with superconductivity, that people will run in that and they think, okay, at least it will double or triple. Maybe in Tesla will announce that they will have a Tesla material, and like a department that they also will look at this stuff. Now people will run to that stock also. But still, the Nvidias, the AMDs, the Microsoft, the Teslas, Apples, they will still grow. They will also have the advantage of this material or something. They will grow over the years because people like these gadgets, and it is always a growing market. So, and does it grow more than 7% per year? I think so. So it is a good investment to have always something in those magnificent seven, or those group of famous growth companies in America, because you will have at least a profit there. And if you can time your buy and your sell a little bit good, and you can play a little bit around it, because you want to do something with your stock, you can make a little bit of money. But if you keep it with those big stocks, and if you don't know what to do, you just keep it and you hold, you will see over 2-3 years it will gain in value. But it can also be that it will implode. You never know. But normally there are the signs, or you hear the news that it doesn't good, so you sell out and you buy another stock that is better. But there are these 7 stocks that are probably these growth stocks. And if you don't, and then you need to also understand what are dividend stocks, etc., etc. So what we will see with dividend stocks, if they are just 5%, and now it is 5.3, is almost the same as a dividend stock. So now people with dividend stock are thinking, must I buy a bond, a government bond, or do I keep my dividend stock? Now, there are also something called like company bonds, and they are most of 1 or 2% higher than the government bonds. So those are already probably on 7% now. Then the question is, if you have access to those to those company bonds like Google, or they need money, the company needs money, they want to lend extra money, and they give these bonds away. And those are 2% higher probably as the government bonds. Now these are better than the dividend stocks. So what people will do is then, if they want to be safe, they rather loan the money to a Google and get 7% back than they have the money invested in Coca-Cola with 5%, but with the risk that the stock can go 5% down. And then they have 0%. But now if they do the same trick to Google, they are sure that they get the 7% more than they started with. So you will see the dividend stock, if the interest rate goes up, you will see that the dividend stocks will go also in price lower, and they sell off those stocks. That doesn't mean that it will happen to those those growth stocks. It can be that people will move the stock into the growth stock because they think, okay, let's take the risk, they will grow. Or you will see not whatever, if the interest rate goes up for bonds, you will see that people will buy more bonds. So what does that mean with real estate and other things? That also means that if the interest rate gets higher, it means companies will have more difficulty to loan money. So we have the smaller companies that needs money, they can issue bonds, but what I already said, they have to increase what they have to pay back. So it gets more difficult to grow, and it will be an impact that they have to pay the 7% instead of 5% or 3%. They have to pay more for those bonds, so they have to have bigger debts, and that is not good for their stock. And their stock will be also priced lower because of the increasement of the debt that is more than expected. Huh? They thought, okay, we only have to pay 4%, now they have to pay 7% because of the interest rate goes up. So it's also not good for those smaller stocks. So the bigger stocks, now if you have like a Tesla that has a lot of money, or an Apple that doesn't have to really loan money, maybe they loan money just to do a deduction of the tax, yeah, those don't care, and that doesn't apply on those companies. They have this the trick on the books to loan money sometimes just to write it off on some other post. So for the smaller stocks, it is an issue. For the startups, it will be an issue. They will run faster to the money, and the existence will be so. So for the risk, if the interest rates keep on going up or is this high, it is a risky environment for the smaller companies. But and also maybe difficult for like startups to start up some things. So it is not good for the stock market. What can we say about? I don't talk about yeah, gold. The only thing I can say is if you want to have some money that is you don't really want to just keep safe over 20 years or 30 years, then gold is a good investment. But still be aware that it has to go up. It has to double. Because you have to pay tax, you have to pay something, some transaction costs. Some costs are always with gold and with silver. Silver is often more tax than with gold. People say, yeah, why don't you buy the crypto? Now, crypto has sometimes the thing that it is up and it is low, up, low, and you never know when you need the money. You can have need the money. You think you cash it out when it is at the top, and you think, okay, I have a good chance. You think, okay, yeah, it's good, but it can be that you need the money when it is at its lowest point, and you make a loss of money, or you take the money then, and it is a small amount, and then 5 months later it is triple or 10 times higher, and you'd say, oh, why did I cash out? But at that moment you needed it. So some people, I know people that have bought in the old days a lot of Bitcoin, and they were millionaires, billionaires, but what did they do? They didn't cash it out. They kept it still. And they thought, oh, I am so rich. And what happened? Bitcoin went down, and oh, now I only have the half. Oh, I only have 1/10 of what I had when it was at the top. Yeah, sometimes you have to buy. So what in those cases, if you have like a gold or a stock that goes crazy up and you have an enormous amount of money, what you do, what my advice is, you sell off an amount of that money, and you calculate, okay, if I have this amount of money, until I die, 70 years old, if I have, for example, I put aside $2 or $3 million, yeah, that is enough money. Maybe it is not enough money. We say $10 million. If you have a profit, like you have $100 million, and you say, okay, I just take $10 million of that $100 million, put it aside in a dividend stock or something that is in bonds or something that is really like 5% or what is it, 5% on the return. Now, 10 million, 5% is still a lot of money that you can live from. So if you have set up that system that you have like a lifeline, whatever happens, you set that piece of money apart. The rest of the money, 90% of the money, you think, oh, I'm rich. Then you just continue with it can go all the way with crypto. You tell it, okay, now I have 100 million, and then 4 months or 1 year later, the 100 million becomes 10 million, and then 3 million or 5 million, and then 4 years later it becomes maybe 200 million. But you never know when you need that money. So the people sometimes are so that if it is the top, they don't sell, or they think, oh, it will go higher, and then it goes down, and they think, oh, it's now at a low. Okay, I sell, and then they sell, and then they experience a few months later it is higher, and they cannot buy it back, and they don't buy, and it goes higher and higher, and they fear of loss. So to avoid this panicking mode is that if it is high and it is only 4%, 10 or 20% of your money, and you can pull out the money that will ensure you that you will have money, a good life until you're pensioned or over when you're dead. Do it. Even if it is maybe 50% of the money. If you have the possibility in your life, by chance or by luck, that something become so much money worth that you can easily live until you're dead. Maybe you have so much money it creates that you're like, wow, money. Take the amount of money off that you can survive without any problems. You pay off your house. You can pay until you die, live there. You can have new food. You can pay all your taxes until you're 100 years old. If you can put that money aside and you can keep it there, and so that is always guaranteed, then it doesn't matter what happens in the future. If that it goes up more, you be even more rich, or it goes totally down the drain and you stop, you still have that money that will secure your life until you die. And you can do what you can do then is stop everything, but think that money you save, and you sit the whole day on the beach, or sitting in your garden drinking cola, or you will survive until you're dead. You've done your job then. You can stop with everything and you can enjoy life. You can go hiking or enjoy programming or do something totally different. Maybe you thought, okay, I want to have the extra money to invest. Don't do it. That money is just to get old. You can start again and start again to make more money, and if you not even succeed, you still are okay. You can work again or something. This is something people you have to really realize when you're young, that you have to have this plan. And then if you go in your financial adventure, if you see this possibility that you have, if you put up 50% of all your profit of your money to guarantee until the end of days that you are okay, do it. And then if you're really good and you can do it again and you can make an enormous amount of money again, you can increase, of course, you can shove a little bit more in that money for later, or you can make a fund that for other people, for projects, or you can make it an investment portfolio, help companies or something else, and then you can grow out of this safe place. But the most important thing is that you need a safe place from that. If you, whatever happens, you don't have to worry about your living, that you have still a house, that you don't have to go out of your house if you cannot buy the food, or you have to have a divorce because you lost all the money of the family. The security you need is that you need to build up as soon as possible the security, or money security, that you can live. Maybe if you're young, that you can say, okay, I now have the possibility, if I put 50% away from it, I have enough money for the next 20 years. Maybe even that idea is maybe good, and set it aside so that you, for the next 20 years, whatever, you will have money. And if something happens, you lose your job or something, you know you can survive 20 years with that money, to find something else, or to go to school and retrain yourself to another skill, or buy a farm and do farming. Same as a company. So a company has this war chest that if something goes wrong, they can survive. They can still pay the salary for the people for the next 3 or 4, maybe 1 year or half a year. So whatever happens, if there is calamity, they survive. And this is also what you have to do as a person. So with this change of the instant rate and all the things you see, I see my brother who lives in Australia, New Zealand. His house is almost getting unpayable because of the interest rate there. What the money he gets goes more and more and more to pay the mortgage, more than he expected, and it's getting very critical financial there. Because if that goes up and up, that means more and more of your money has to go to the finances. You have to pay for the tax and for everything. Everything gets more expensive, and that is what's, of course, what you didn't plan. And so you need to have reserves. You need to have a plan in the future that you can survive this. Some other countries, like in Japan, the interest rate stays very low, but it will change. So what we did is also, we had mortgage, we split it in two, one variable and one we fixed now. So whatever happens, half of our money we know will not change. The other half can change, but it will not go lower, it will only get higher. So we pay now a little bit more than we used to, but we have the security that we can pay this amount of money for the next 30 years. And I expect that the instant rate of Japan will grow. It will not stay this low. If the whole world is going to 4% for the next 5 years or 10 years, Japan has to follow. If it is not now, then it's over 2 years. So Europe is now at 5%. What I expect with the rebuild of Ukraine and all the problems they have with the weak countries, I think the instant rate of Europe will be higher than America. So America is now at 5.25, 5.5. Europe is at 4 point, what is it? 4 point, now 3 point? Yeah, something 4 point. This is old data, of course. Oh no, this is not old data. This is new data. 4 point, here, 4.25. That is exactly 1% lower as America. No, 1.25% lower. 1 point. Yeah, so it's around 1%. I think that America can build off the instant rate, so it can lower the instant rate faster because you see the job market, it goes crazy good in America. They already increased the salary, so people have more money. They have not. It is a soft landing. I think they have no problem with energy. They have enough gas, so it will go on as always. Some people complain that it's a little bit too high. So, but what will happen? There will be a turnaround, maybe around 7%. It will still go up, and they want to longer and higher interest rate than needed, so that they are sure that there's nothing bad going on. So then they will build it off. That will be good, of course, for the stock market, that will push it up. But I think Europe cannot follow, because if it becomes winter, so maybe in the winter they will lower. America is smart. Maybe in the winter they start to stop the instant rate increasement, and Europe has to still increase it until over the level of America. Why? Gas prices. They need gas. They cannot get the gas from Russia and the stuff out Russia, so they have to import it. Now you see that Saudi Arabia is lowering the barrel production of oil, so they will push the oil price up. Now that means they need to print more money, and it means that they need more increasement of instant rate, of course. They need to loan more money. So I expect that Europe will, in the winter, get more in problems, and America will not get in problems, and they probably can sell more gas to Europe, so they will be more profitable than the previous years, because previous the gas was delivered still by Russia. But this year it probably will all come from America, and Saudi Arabia will focus their gas on other pieces on the market, and I think they are more colluding with Russia and China. And China is also growing crazy, so China, even Japan, will pull out more gas out to Saudi Arabia, and I think America will supply Europe with their prices. Japan has to start up their nuclear plants, and that means also for France and Germany, they have to restart it, because they cannot run only on gas. The gas prices will go crazy in a few months when it's getting colder and colder. So that is what does it have with FX pairs, the forex. So I think it will have an influence on the forex. If I look here, it says, yeah, the European ECB is of course independent from America, and they have their own problems with their own countries. They have the poor side and the rich side, and the south side and the north side of Europe, and the instant rate is linked to that. But I think that first they have to follow. You can see it also what's happening if the Fed is doing a movement. Euro will follow the next day, or in the next hour already, and they copy the shadow, the movements of America. So I think this will continue, and people will think if America stops and they say, okay, we reached our point that we don't need to. I think Europe is still not there, because they will be lagging around because of those certain countries and those new added countries. They will have debt, and I think also the richer countries, the northern countries that were not in problems, will become now in problems because they loan too much money and the instant rate went too up. So their banks will have the same problems in America. They have bonds that are worth less because they bought them at a lower instant rate, and now the instant rate is higher. So the difference is a loss for them. So that will be an unexpected loss. So I think this will not handle good for Europe. Also, Germany will probably lose their way of production, a way of what the manufacturing was before. I think it will stream away, technology will stream away out of Europe to America, and maybe to China and other countries, maybe in India and other countries. You will see that they will pick up the engineers. There's even a rumor that Indian engineers will come to Germany because there are not enough German engineers. That has to do, of course, with the population change in Europe. You see that a lot of North Africa people, like from Morocco, Turkey, they entered Europe, and they were first there for the lower jobs, and now because of the Western people, the richer people have less kids, and those kids from those imported countries have more kids. They are overtaking the population, and that will mean that the intelligence will go a little bit lower in Europe, and that will mean that the jobs, the tech jobs, cannot be refilled by those people from those generations that came from Northern Africa. So they have to import, and that's happy for India, that because it's already overcrowded there, that they can go now to Europe, and Europe will need those people because the people that live in their country don't have the skill or don't have the intelligence. This is of course very bad to say the intelligence, but it's a fact. It has to do with AI guy. It has to do with falling back to it. It has to do with DNA. It has to do with a lot of things. It is not only the education you have or the social context. You will see, if you're an immigrant, you are often the smartest persons in your country or in your neighborhood, and this gives you the chance to go outside of your country to show off your talent. The big mistake is your children will have not the same intelligence or higher, because you're an outlier on the upside of your intelligence. So your children will go back to the average or lower, or if you're sometimes lucky, also be a spike. But you will see on average, on percentage wise, that only 20% of the children are as smart as their parents, and the rest will go back to their average. Well, if your average is high enough, so if you're from higher intelligent country, and you can go to another country, and your children go back to your average, then you're still high enough as your parents. But if you're like from a very poor, very low intelligence place, and you're outlier, you have like an intelligence of 120%, but the average of your country is maybe 80% or 80. So that means that your child, there's a difference of 40. So there's a big chance that your child will not have an intelligence of 120, but lower than 120. So a degradation of that intelligence family. But is this intelligence still high enough or the same as the country you are in? And that is sometimes the case, is even not the case. So these new generations of people, intelligence goes lower. That is shogunai, that is just what happens, and it pulls down the whole intelligence of the country. Is this then that means that it go down? No. After 2 or 3 generations with mixing of the people, it will pull up the intelligence again and it goes steadily up. It will always go up, I expect. But it will go, it pushes a little bit less down. So there are some countries that are even selecting on intelligence, what are your skills, what are your intelligence, but they have to also realize their children, their offspring of those people you get in, those will not have the skills of their fathers, of the people you let in. And this is one of the biggest mistakes I think the politicians made over the years, and they can only find it out after 2 or 3 generations that this is the case. And what happens is they need again outsourcing, or they need to import other people with again higher intelligence to fill in the jobs they don't have the people for. And everything in the countries go higher up. You've seen these days it is all high intelligent jobs, office jobs, and yeah, that is the problem of the West at the moment. In America, you see also it's a nice combination. The simpler jobs are done by Mexican people or the from the border, and the high intelligence jobs. You see a lot of people have the visas. The whole economy is running in reality on immigrants, not only on the smart immigrants for the smart jobs, but also for the lower paid jobs that nobody wants to do. Those are also fulfilled with immigrants. And in the middle is maybe the Americans that are doing the average. And the high end is the foreigners, and the lower end is also foreigners. So maybe that is the picture we will see also in Europe, that the middle will be done by Europeans, the people from the country. The high end will be probably imported or specialists, and the lower will be done by the people they have that came from the previous generations of the imported people. So that, because that is lagging behind of America, will also have an influence. This will pull Europe also down. That's why I think also the recovery of Europe will be much slower than America. America is more flexible than also the smartest people go to. If you look at the Chinese, first they go to America. If they cannot go to America, they go to to Europe. And if they can't go to Europe, they go to Korea or they go to Japan. So that is the last choice. So, but all the smart people go to America because you get the best paid wages. So about wages, you see wages in America went up crazy. Europe is also going up a little, and you guessed it, Japan doesn't do anything with wages. So that's also the order of the people that want to move. You see Indian people or Chinese people that want to move outside. The people that have the best scores, the most intelligence, goes to, of course, to America. They get the most bucks for their skill set. Then if they cannot make it there, if it is too difficult, they go try to in Europe. And if they cannot try in Europe, they go more close to home to Japan or Korea or another country. And also you see the people that go to Japan, they only stay here for a few years, and probably they want to try again to get somewhere in America or Europe if they skilled up here in Japan. So that is the talk I want to do for a moment about the instant rate and ECB. Let me look if I did something, forgot something. I think I have it all. Yeah. So we can talk about maybe what does this mean for Tesla? Oh, this is understanding Elon Musk, of course. Um, so I worked for an international company. Um, First, I worked in a Dutch company, so we all knew that we were Dutch speaking. So we need at least, if we want to expand outside of the Netherlands, we went to go to Belgium because they also speak Dutch. A little bit of Germany, a little bit of France. But first, you want to expand in an area where you can use all your Dutch skills, and as a Dutch company, you can easily transfer to that country. Yeah, a t-shirt for the pocket. So this is also when I worked for an American company, Informatica, ETL company. They also had higher management. I talked with. They said they have a plan, and it is a chart, the percentage of products you sell in which country or which continent. So if you're American based, you're American company, and you sell 80% of your product in America, you're not an international company. It needs to be something like 23%, and it has to do with this weight factor of market. So I think it has to be 25% in America, 25% in Europe, Japan, 10%, and this whole program, how much percent in which country where you have to sell your product to have this 100% spread all over the world. There is some formula there that this percentage has to be stable. This has to be a specific amount of percentages, and if you miss some percentages somewhere, you're or focus too much on for Americans, or to focus too much on Europe. And if you want to really build a world brand, you have to have this nicely spread percentage all over the world. This is also what in the future Elon Musk has to do. He has to have his factories in Africa, in Japan, already in China, in Europe, maybe a little bit on Russia. So all these offices, and you see also worldwide, Japan is the strange duck. Those companies become all Japanese, but that is Shogunai. But they have to have a representative in Japan because of this global picture. So I think maybe for the easiest way for Elon Musk is talk. Maybe he knows. I think he can write a book or find a book about it, and he will know these percentages. So he knows that at the moment, maybe no for sure, that this market in America is too big, and his market probably in Europe is still a little bit behind. So what he has to do is invest in the countries more to level it out. Of course, American market is good because you start to think about these percentages. If you're getting a saturation of the market, so first he has to saturate the American market, and if he has product that he cannot really, he can sell it, but it is more difficult to sell. He knows he has to move the production out of America into the next step, that will be Europe. And if that is done, and if that is a little bit clogged, the selling gets a little bit more difficult. He knows he has to go to Asia or to South America or to Africa or some other places until he has this nice percentage, what is known by all the managers all over the world, how much percent which country of what continent has to be. So maybe that is the easiest way to plan his factories. So I'd still think that by every year or every 2 years when he plans a new factory, there will be a factory in America until it has so much production in America that it says, okay, this is enough. Maybe one of the signs was already that he started the factory in Mexico, but I think this Mexico factory will also still supply cars to America. Maybe Canada we will see something. So he will first plan all America because that is close to him. But I probably also will expect that people that know more about international business will push him to Europe and to Asia, because those markets in India are not to underestimate, because there will be probably your biggest profit. And it is not also about the amount of profit, but it has to be amount of your impact. If you have a big company, very big company in America only, you always have the problem that if something goes bad in America, your company is in danger. If you have the whole world there and your profit is a little bit less, if something happens in Asia or something in America, doesn't matter. There are so many other offices in other places of the world that they will do good or maybe better, because you will survive everything. So still his survival is in danger because this attention is too big on America, I think. So, and also maybe too big on specific one place in China or in Asia. So he has to spread the risk in Asia, and I say go to Korea and go to Japan, maybe Australia and then Indonesia for the resources, or another country for the resources. But he has to spread his risk in Asia. He cannot only rely on China. In Europe, he is only dependent on Germany. I think also there he has to be careful. Do something in the UK, do something in Morocco, then you have the underside of Europe, and maybe, yeah, that is okay, because there's already a good infrastructure in Europe, and there's a European Union. So if something is not possible in Germany, this probably also is not possible in France, but maybe it is still possible in the UK, and maybe it is still possible in Morocco. So my advice is focus maybe in Europe only in Germany for the moment, and maybe some small batteries or solar things in France, Spain, and Greece or something, but not only to get some engineers there, but not really production. But make your bigger, the second biggest production, the second and third biggest production in England and in Morocco. Then I think you also in England is just because it's a totally different market, left driving. So maybe you have to your factory can be much smaller. But in Morocco, you can still keep a big factory because you can then also supply Africa, like Egypt or other countries there around there with solar cars. But also maybe there you can maybe focus more on solar panels or on energy there. And you still have a line up to Europe. And if this this superconductor comes, then it is you just connect with the boring tunnel with the superconductor to Spain, and you wire up the European grid to the Africa desert, to the Sahara desert, because Morocco has a piece of the Sahara desert, and you can build it full with solar panels, and you supply Europe with with hydrogen gas that you make there, or with electric power. So I would expect something like that for Europe. And America, you can still build some more factories there, big or small. It's not doesn't matter so much. I think maybe he can do something in Brazil or something, or in Argentina. Maybe in combination with the ore that he can find there. But also those countries are political, sometimes not geopolitical, not stable. So he has to build in some security. So if you build something in Brasilia, you maybe have to also build something in Argentina and maybe some other countries around there. That if one country falls out, he has a backup in another country. That is, I think, very important here in Asia that he has to do this. In America, yeah, the start it was all or nothing, because you can imagine if American politics were really against Tesla, they would not survive. Now they have a little bit more survival because they have the support from Asia, from Germany. So there is a little bit now stabilization in their production and in the market. But he has to go to Africa, so I expect Morocco, and expand more different continents where his factories are, just to ensure the stability of his company worldwide reach. And I also expect that he has to think with the space program. Maybe there is something like the Five Eyes. That means England, America, Australia, New Zealand, and I think Japan. So maybe in those countries he can share space stuff, and also Japan and all those countries can go to the International Space Station, and there are some working together with NASA and the military. So I think if he builds a star launch pad in near Japan on one of the islands, or in Australia, I think it's okay. Or for New Zealand, I think the American, maybe in New Zealand near Rocket Lab, that he can maybe rent some place for a starship with Big Brother for the neutron. Woof, next to it, the starship can land. Maybe work together with Peter with that. Yeah, don't wrestle Zuckerberg, but make friends maybe with Peter, and build there a tower for starships in near the site of the neutron where he wants to build it, and work together there. And I think that would be maybe interesting. And he has to become more global company. If you are more global, you have more access to engineers globally. These engineers, let's tell, what we saw with this LK99, you see that material science becomes more and more interesting. And also, if this superconductivity becomes something, it will have a big impact on his company and what his future is. So I suggest start X material, matter X, something like that. Make an X under X a company that is specialized in material research and science, and search for new steels, new materials for making the molds, or whatever what you need for the cars, or for what you need in the batteries, or what you need for chemistry of somewhere, new plastic types, new insulators, or new fluids for cooling, or superconductivity, or maybe something you need for neural link, some fluid for the brain or something. He needs already. He has some part of the department in SpaceX and in the department in Tesla that does material research, and probably they are also exchangeable. Just make a new company specialized on that same that he needs to do with AI. Pull also the FX into his XAI, and use then also the Doji supercomputer for that. For the AX, but maybe also for the material science you need a supercomputer, because these days they can use software to test this. So I think there is a lot of opportunities there, and there are a lot of fields where he can get engineers. And yes, you know, some places in the world you have a specific engineer. For in Korea, there is a specific people engineers there that are specialized in something because they're good in it. In Japan, you have different engineers that are good at some stuff. Europe, the different countries have the specific engineer specialties. America has their own specialties, maybe more like the States have their own specialties. So, if you have a global company, you cannot only rely on your specialty that is only found in America. You need the whole global people, the best in the world, not the best in America or the best in the West. You need the best in the world. That is only one way to do it. You have to have a representation all over the world, and you have to be a known brand or very, I call it, known and popular in those countries. And to know how much percent it is and how you be in the what is your amount of presence in those countries. That is what I talked about. That is this percentage charge of the world. There's a fixed amount of percentage where your business has to come from all over the world. When I worked for Informatica for the ETL product, we reached that. I think after a while, I think in the second year or something, there was a good presentation. There was first they saw us what the goal was, how they wanted to be represented in the world. And I thought I saw a chart later. I talked with the vice president or the president of the company, and he told me, the vice president, he told me that they reached it after a good work and good extension of the offices. The offices were still very unstable, but they reached it and then they went private. Probably then people thought, wait a minute, this company can be grown much faster and will be not taken over by any IT company. So take it off the market. And it was taken off the market, and this year or a year ago, it went public again. So that is my talk. I talked a lot about stocks, and what I talked about is not financial advice, but as you maybe will understand, it is some kind of advice. We always use always money. What I already taught, you don't need. Don't use market for buying any investment that will result that you cannot pay your rent or not can eat or not can work, or you will have any limited factor on your life, on your daily life. So don't use money for that if you want to invest. Investment has to be something separate, which you can lose every time of the day or in your life. That if it is gone, it has no impact on you. But if it makes an amount of money, it will make it very easy. And maybe if you're very lucky, and that is not everybody, maybe 1 or 2% of all the people that does this game, they will have maybe the possibility that they can make an amount of money that they don't have to work anymore, or they have enough money that they can reach their pension or until they die. They don't have to worry, and they can work just to be doing something, and that they are financially already secure. But also another tip is, if you have money and you can spend money, first pay off your loans. Debt is the first thing you have to reduce. If you then not have you have no debt anymore, then the money which you really then have left over, you can invest or you can use for other things. But still, look out that it doesn't influence. If something strange happens, for example, your car breaks down, that you don't have money, you need the investment money to buy a car. That is not. So you always have to have some savings set aside. You choose what the kind of amount. For example, if you lose your car, can you get a temporary car or washing machine, or your television breaks down, that you have some money saved there. If you then still have money left over, or you can accumulate money, that is the money you can use for investments and buy crypto or something. But still, be realistic that if that money is gone the next day, there is no effect on your life, and that makes you sleep much easier because it has no influence on you. Also on your future plans, it has no influence. It can only add, makes life easier in the future, and if it doesn't succeed, then it is shogunai, so it means better. It's okay. You're not a lucky person, but yeah, you learned. Probably you have learned a lot about financial stuff. You know a lot about more. You talk about with other people about financial stuff, and you learn a lot about more understanding the news, more what's going on around the world around you. So it is not only if you're interested in like instant trade and geopolitical, what is the role of China and something. This will make your mind think about all kinds of other things. And sometimes if you do your daily work and you have to make a decision of what do I want to do after I quit this job and I find for a new job, maybe because you looked at a lot of financial programs, you know, hey, the next hype will be material science. I can wait 1 year doing nothing, and do some job at Burger King or something, but I can also go for half a year to school and study something about material science and maybe do an internship half a year, and then maybe can find a job in material science and work in a laboratory and do some experiments. Maybe there's a new career possibility. And that only you find out because you look at the financial program about superconductor activities. So you have to also be able in these times to be able to change, to find a new occupation quickly. Try be always get a more general skill set, and also be able to pivot. Not only your company has to pivot sometimes, but also you have to pivot in your career sometimes. And that's also what I can advise people. Set some money or time aside. Look for something, not a hobby, but also a hobby that can maybe become your future career. When I was doing, for example, a lot of IT stuff, I also took a lot of photographic stuff. I used to photograph a lot and even could turn that in a really profession. But luckily, I didn't have to do that because I went to another direction. First, I went to the hardware of computers, and I had the software already there, and I did some others like other jobs in the meantime. And at the end, I ended up at the software end, and later I went into the data end. And now I'm at the AI and book writing end of the whole spectrum of my skill set. So this is where I want to end. I hope people will learn something about this talk. If you're young, go and study the financial market and start saving. Don't spend it all. Spend something. Enjoy your life every day. That's what my thing is. But you can enjoy your life with very expensive stuff or very simple stuff. I remember that I have very nice times sitting, looking outside to the sun down with a glass of Coca-Cola or a cup of tea, and just sitting outside there and at the evening sky, seeing a sunset was for me, wow, this is much better than any movement or movie or going out and sitting at a bar in a smoky bar. So I enjoy my life in a different way. But everybody has his own thing. If you want to go to a bar, then you have to find maybe some friends you go together that you can reduce the cost or something and enjoy it in that way. Or you go to a poker evening and you poker with virtual money and you have a nice evening that way. But look out what you spend your money on, because if all the money you spend when you're young, you will never get back. And if you invest it and it will go interest on interest, if you could, when you are young, you could set aside $1,000 when you bought at that time the good stuff, the good stock, and you are 40, 50 years older after that, and that investment would be crazy amount of money worth, and you would forgive you. Why didn't I buy when I was young, like Bitcoin for 10 cents? Huh? And now it is maybe $1 million, one Bitcoin instead of 10 cents. But that's all dreaming. There are people that made this a lucky investment, but still, it's still possible now. Maybe you buy a stock that says, maybe a Rocket Lab, buy a stock of a few blocks of blah, blah, in the future it will be the space company. In the future, you don't know. So you buy something when you're young, do some wild investments, but also be careful. And if you're a little bit older, do some wise things. Set money aside. Start to collect, set aside money for later. It's never wasted. If something happens, you want to immigrate to another country, you have money set aside. If something in the family happens, you have to help somebody, you have money at the side. So it's always good to have some money saved somewhere. Don't let it be robbed by family or other friends. So keep it really aside, maybe sometimes secret. That is my advice, and I hope people will have an advantage of this knowledge. And the knowledge you have to learn yourself. There is not somebody on the internet that tells you how to invest. That's the secret. That is the biggest secret of all people. You have to learn everything with yourself. You make your mistakes. You must know before you do it. You make mistakes. So that's why you not need to go in all. You just lose a little bit of money or just use fake money to trade, to learn trading. Don't use all your money directly. Just, you will lose. maybe you will lose 90% in the beginning for the first 2, 3, maybe 4, 10 years. But after that, if you know it, you can make money, you can live from it maybe, or you can make money so good that you have some extra money put aside for the future. But every takes time. Skill learning is 10 years of studying. If you do it beside your normal education or your work, so you need your time for it. Be patient with it. Patience is very important, and keep on going. If you've decided in a direction you like it, go on. If everybody says, uh, oh, I see something in investment, some space investment. Okay, space company is getting is now taking private something. Okay, stock went up crazy, or not? Something. Okay, but you can imagine. Uh, be careful. Start early with financing and understand financing, how to save your money, because this is not learned on any education. So do it yourself. And also, if you learn a skill, do it yourself. Don't trust people on the internet. Don't take a course for money to learn to trade. They also learn to trade on the internet for free. Books are for free. Don't You can buy some books if you like the book, or like an O'Reilly book and it's not so expensive. Maybe secondhand and old print. New books you can all find on the internet. They're all there. Look at GitHub. You find every book is made there. You can find the book, or uh, everything is out there. So you don't have to invest anything. You just need a computer with internet. That's it. And that is how you can educate yourself. Any skill is out there. And now with AI, you ask your AI how to learn a new skill, and it will give you for free how to learn it. And that's much better advantage that you pay every month $20 to a website, and then you see some advice and you don't know if it is trustable or not. Guaranteed profit does not exist. And also, you cannot rely on the past, what the future will bring, because that is not how the future can be predicted. And this is my end. Hope people will learn something and will do it. And Gambate.